G'day everyone, it's Graham Bibby here. Welcome to this week's market update. As many of you will know, in these weekly updates we go through over 46 different markets on different time levels. We go through currencies, and we go through commodities, we go through funds, stock selection and sectors. So please make sure that you tune in every week to the market update. It's only the interesting things out there that we're reporting on. And for any of those of you who want your money managed, please go to the website richmondhk.com, and for those who are really looking to manage your own money and how do we do all this, please check out howtotradethestokmarket.com. I'll see you on the other side. Good day, this is Graham Bibby here with a market review following the drastic and wild fluctuations of the world stock markets over the last week and a half. I thought it could be appropriate to run through one of my previous presentations to highlight the market action and the severity of the sell-off, which to me is akin to a mini market crash, which I'll explain to you as we run through. So we're going to start off today. It's the 17th of August 2011. We're going to start off today by looking at last night's market action and a few areas listed on the US stock market, which has the broadest array of international exposure as well as the US stock market. So we're going to start off with the Standard & Poor's 500, which is an index of 500 stocks. And what we've got here is price action going back to, this is September of 2009. Each line is the daily price spread for that index, and it shows you on the spread also a little bar marker on the side where the market ended during at the end of the day, and this just shows you the price movements during the day. This is the low, and this is where the market ended. The market started here, went to a low here, and ended off the lows, actually mid between the start of the market and the low of the market. So it doesn't really tell us a lot. If you end near the high of the day, even though you're down, that can be a positive sign, and if you end near the low of the day, that can be a negative sign. So let's whiz across here and look at the market since the beginning of 2011. I've explained before that these trends here are positive, but they had no prolonged upward movement, so they kept calling reversals and started to break this low here, was broken here, went to new lows, but that downtrend didn't persist. Then we rose above those lows, marginally above that high. Then we had a low here, higher than this one, and then what appeared to be a breakout. So we've gone from positive to negative to positive, and then lo and behold we started to break down again, which looks negative. We didn't go below that low, so that was a positive, and then we seem to have formed a base at this level. And then we had a double bottom here, slightly higher. We broke above that level. Then we had another higher bottom here, and it seemed like the market didn't want to go down. There was resistance overhead here. The market didn't want to go down. We dropped marginally below that to support levels, and then we can see what happened. The market just went zoom. That is, normal conditions, a crash. The market's gone from 1,300 to 1,100 in a matter of days. That is 200 points, which is somewhere in the region of 16-17%. And then what we've had is this bounce. Now I often say a picture paints 1,000 words, because even though we feel good over the last number of days with this rise, you can see the start of the fall now, which was here at 1350, and then we've had this small little bounce, and my concern is this moving average here, this blue line. Generally it points in the direction of the trend, and in this case it's pointing down. So normally under technicals this would continue to, if it continues to fall, when this meets that moving average, the market is likely to turn over and go lower. So obviously not a good sign. Now let's look at what was a bellwether before, Apple, and actually we're still holding this stock. The reason we are is it broke out of this sideways movement. It looked to be one of the leaders here of the market, which is why we felt confident the market was moving higher, because we'd had those tests in the S&P of the lows, and we kept trying to break higher, and then it looked like this was leading the way. It had a bit of a sell-off like everything else, and then it's bounced back up. Arguably that is a bottom in place here, but the problem is now we've got the overall market looking negative, so this may be dragged down by the market, but for the moment it's looking okay. We're going to look at the Nasdaq. Similar situation. We were between this support level here and this resistance point here, basically moving sideways. Same problem: buy signals, sell signals, buy signals, sell signals, buy signals. This is actually the worst market environment for our type of trend following analysis. Obviously hindsight is a wonderful thing. We can only see this market action in hindsight, and you have to move with the signals, because we don't know that once we get this upward trend that we're not going to be in a new bull market. It is very, very unusual to get this type of sell-off. The market is fallen here from 2,850 to 2,350, 500 points, around 20% in a matter of days. That is huge. We've had this bounce up. The market was down last night, and if there's going to be any sign that there is a recovery underway, we need to see this now starting to move up, and then we still have to overcome that falling moving average. So not looking great for the overall market. This is the Dow Jones 30 index, the top 30 stocks. Again, you can see there was a bottom in place here. This was a higher bottom. Looks great. We haven't fallen as low as that. We reversed that bit of a downtrend here. Higher bottom here, we've gone higher. Then another higher bottom, and it looked like, okay, there's a great possibility. We've broken above that resistance point. This time we're going to take off. And then on a dime, the market basically collapsed from 1275 to just over 1050. So again, 200 points, about 16-17%. We've had this bit of a bounce. This now becomes resistance. We've got to see what happens with that moving average. So let's have a look at the next one on the list is a Malaysian. Let's look at emerging markets. This was holding up the whole year, trying to break out. And again, that's at a sell-off. It was around 15. It came down to 13.50. We were looking at 10%. So on a relative basis, you can see that Malaysia, representing, let's say, Asia, it hasn't been so severely affected. But again, we've had a bounce, and we've got that falling moving average which we need to overcome. What's really disappointing for me is the uranium stocks. The fundamentals look great. We had this downward movement here following the Fukushima concern, and it looked like we were basing out here and kept trying to break out to the upside. This was the more recent one, and then we tested back at the start of the sell-off, but didn't look anything too concerning, and then one day through the stop, and the next day, boom. Here, above 250, here, 2. That's 50-point movement, 20% in one day. 2 days damage, you could say there's about 23%. That is basically unheard of. And then we've had this nice rally, but no trend yet. From below 2 to above 250, 25%. In about 5 days, it's turned over. We've got that concern of that falling moving average. What we really need to see is this turn up and ideally move above that moving average. At the moment, if we follow technicals, you can see here, going way back here, if we're below the average, we're still going down. And once we break above it here, and then we're moving above it. And we break below it, we're staying below it. And then once we cleared it here, off we went, off to the races. Here, we could have been a sell. This bottom is higher than this one. So you're still in the game. Was a little bit of concern, but you see the index didn't turn over here. This point here, it didn't turn over. We went to new highs. We seem to have been breaking above. Here we broke above the angle and we broke above the moving average. It was so positive. Again, very unusual to get a turn like this in the markets. This is Monsanto. It's an agricultural company, fertilizer company. Again, we've been in this range here. We broke out to the upside. We had a new higher bottom, a new higher top, looking so positive. And then again, we had the sell-off here. You know, we're now above this support level here. So there's still potential here. If this were to turn up, break above that average. But for now, you know, given we came from here and we went to here, it's a bounce of roughly 50% of the fall. This is IBM, which again was following Apple. It broken out of this trend, it broken through this resistance, it had a higher bottom, it was moving to new highs, and then all of a sudden, whoosh. It went from, if we took the peak, around about 186 to 160 in a matter of days again. And we've had this bounce, pull back last night. This were to turn up again, that'll be some promising feature on this stock. This point here is quite good, this level, because it's above this resistance point. Baidu, again, same thing, breaking out to new highs. But last night it turned over a bit. The stop point is not that far below here. I would say around about a 134. This hasn't turned over yet, but looks like it could be turning over, so not great. Let's look at the financial industry in the US and the banking stocks and the likes of Goldman's. You know, they had a big sell-off, 140 to somewhere in the region of 110, 20-odd%. And if we go and just zoom out a bit, we can see here they recovered from the sell-off of the global financial crisis. Here, recovered, but since early 2011 here, this Goldman Sachs was 175 and it's 116 now. It's down 60 on a price of 170. So that to me is somewhere in the region of 40% down so far this year. If we look at Bank of America, one of the stocks that Warren Buffett liked, you can see here beginning of the year it was 115. It's currently 740. It's 50% down from where it was beginning of the year. And if we look here, this level on the left here, this is into the start of the global financial crisis the stock was trading at 54 and it's gone down to $7.40. That's around an 85% decline. This is the current market action. We've seen it consolidated, but that moving average is falling. And again, in the recent sell-off, it took one day through the stop, if that's where, if you were positioned in there, and we weren't, but if you were, and the next day, boom, huge falls. Metals and mining, concern again. This was looking positive at this point. The bottoms were higher than these ones. We moved to a new high here, and then it came back to the support level, and then a few days, zoom, it fell from 65 to about 52. Again, that's huge. That's 13 points. It's about 20%, and from that peak there, it's even more. And if you take the peak in March, when this was around 78 and it went down to 52, that's a 33% decline. Got to speed things up a bit. Still, similar chart. This is the financials ETF. Again, you can see the severity of the fall. Here, we're just marginally below 60, and we fell to 40. We bounced back to 45. Huge drops. Caterpillar, it's farm and construction machinery have been doing great. And then, we've had this break below all sorts of support. This is turned over last night. That moving average is falling. Abercrombie and Finch was looking good. We moved above this base level. We had a higher bottom here, and we're looking good. And we turned over here. So now we've recovered above this trend line. So now we need to see what happens. The moving average is flat. It hasn't turned over. So there is a possibility that this may be one of the stocks that goes higher. Korea, which was looking good. You can see 1, 2, 3, 4 trading days, and the ETF fell from roughly 63 to 51-ish. So that's 11 points. That's huge. That's a huge drop. I just want to show copper have broken out of this trend and then went into free fall with the markets. Priceline.com still kind of holding up there. It hit a higher bottom here, higher than this. It was looking quite good, and then it's sold off, but not as severely as the market as a whole. Hong Kong, broken through this resistance level to the upside, was finding life a bit difficult here, and boom. The most liquid market in Asia, and it suffered relatively the most. Again, 2 short months ago, it was above 23,000, and it dropped to somewhere in the region of 19,000. 4,000 points in a couple of months. That's 15-16%. Rare earth here in short supply, broke below support levels, trying to regain it now. If this can move up and break above this, then it could be a re-entry point. Indonesia, not immune, was looking great, was holding up, and all of a sudden 1, 2, 3 days, boom, 34, and we're 29. That's huge again. That's 5 points, 15%, but we bounced. We're now above these resistance points. The moving average is flat. It could be one of the ones to break out to the upside. Hong Kong Bank had broken out of this downtrend, had a bottom here, was looking positive. It's slashing staff around the globe, and boom, it collapsed. 50 to 42, 8 points, 15% move. Shanghai market again broke below this support, but has managed to regain it. Possibility there that could be positive. And the last one I want to show you is Latin America, which has been in this range, which I've mentioned, for some time. between these. This is the resistance level, trend line. This is a support level, trend line, and bang, we've fallen right through the bottom of that support line, and we went from 80 to 66 in a matter of 3 or 4 days. 14 points, 15% or more, 16%, and we've had this bounce. So anyway, that's to summarize. The markets aren't looking great. They're not still in free fall, and we will see in the next few days and weeks whether there becomes a trend, because this is not a trend. That's just a collapse, and this is not a trend. That's one-way action. Now we need to see where the trends are emerging. So this is Graham Bibby on the 17th of August 2011, signing off and saying we'll be back with you with more market updates and more live videos very soon.